Today, is Bitcoin the new property market? Hello again, it's Martin North from Digital Finance Analytics, writing the latest post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Adrian Plosdy. Is that right?
Oh, that's very close, Martin.
Well, I had a couple of goes. Thank you very much for spending some time with us. Let me get you to introduce yourself first, because of course you've got a very interesting pedigree related to cryptocurrencies and all those things, and I think it's a good time to have a conversation at the end of 2019 as we think about 2020.
Yeah, cheers, Martin. I run a cryptocurrency exchange here in Sydney called Independent Reserve. We're one of the oldest and largest cryptocurrency exchanges in Australia. We've been around since 2013. And we've really seen the cryptocurrency industry really kind of grow and mature from, I think that was really in its infancy when we started to something that's now becoming accepted as an asset class that investors can use in a portfolio to basically diversify. It's an asset that's not really correlated to a lot of other assets, and we're starting to see institutional. We're really beginning to see institutions beginning to look at this space as well. So it's really grown a lot in the last few years.
Okay, so how long have you been running? No, just let me get it clear. Independent Reserve is the name of your firm. Is that also the name of the exchange, or is the exchange separate from that?
That's the name of our firm, which is the exchange.
Okay, yeah, great.
Independent Reserve.
And it's Australian based?
Mm-hmm. Yes. Yeah. So we really saw an opportunity to create an exchange in Australia because we saw Australia as a safe jurisdiction. It's, there's a lot of regulation in Australia. Australia has a reputation, of being a place that's innovative, but also very safe. And I suppose, when we began, the cryptocurrency industry was a little bit like the Wild West. So, there was really a need for regulation. There was a need to assure, the users that, they were dealing with a reputable exchange, an exchange that, wasn't going to lose their money, and an exchange that was a place that they could trust. So really felt like, by being in Australia, we're really well positioned to be able to deliver that to our customers.
Right. And how long has the business been running?
So we started Independent Reserve in 2013. We've just had our 6th birthday. So we've been around for quite a while.
Okay. And roughly, what sort of customer base, or how many people do you have
so
using
at
your
last
exchange?
check, we've got about 130,000 customers. So we've actually grown quite a lot since we started.
Okay.
So I suppose when we launched, over the first 2 or 3 years, the market was really quiet. Cryptocurrency was really seen as a domain of, technology early adopters, and we've really seen that progress. Where now our average customer, is a lot older, is more sophisticated. It's kind of progressed from the early technology adopters to perhaps the, more sophisticated investors that are looking for, returns in this slightly more exotic asset class.
And of those, what proportion would be from Australia versus international?
So we're largely Australian based. So probably about 90% of our customers are probably about 90% from Australia, and quite a large percentage also from New Zealand as well. So we're one of the few exchanges that allow customers to deposit in NZD. So I'm not aware of any other exchanges in New Zealand that allow their customers to do that. So we're actually quite popular in New Zealand as well.
Oh, the Kiwis will be very pleased. Yeah, that's good.
Oh, the Kiwis love it. Yeah.
And in terms of the cryptocurrencies that you have in your portfolio, as it were, obviously Bitcoin's there. Do you cover a wide range of other cryptos as well? Or?
So we've got 14 listed at the moment.
Right.
So we've got all the big ones and a few of the smaller ones as well.
Okay. Ripple, is that there?
Ripple's there, Ethereum's there. If you have a look on our website, I guess most of the ones that you've heard of will be there.
Okay, right. And I guess, people may not quite understand what the purpose of a cryptocurrency exchange actually is, right? They obviously are aware of the cryptocurrency. So what precisely is the functionality that you offer, and what's the value proposition to potential users?
So we're basically a peer-to-peer exchange, I suppose you would call. So we're a marketplace where people can trade cryptocurrency with each other. So we don't actually trade with our customers. We just provide the marketplace. So we're what's known as an order book exchange. So basically, a person can deposit, say, AUD into their account. Then we would credit their account in AUD, and then they can use that AUD to buy cryptocurrency from one of our other customers. So basically, we just provide the marketplace where our customers are able to trade between themselves.
And the price setting for that particular trade, is that done on your exchange or is that done somewhere else?
So it basically operates as a free market. So it's an order book, and the market creates. So it's, I guess cryptocurrency trading is a little bit different to what people may be used to, because there are exchanges all over the world, right?
Yeah.
But you will see that even though the prices on different exchanges are independent, they tend to move with each other. So there are, I guess, people that would exploit any differences in the price from one exchange to the other, and that would just be able to exploit the arbitrage opportunity. So we don't create the price, our customers create the price, but you will pretty much find that there is kind of one worldwide price across all exchanges, and it tends to move pretty much as one.
So if I'm a customer with you and I decide to trade, do I trade only with a customer on your exchange or
That's
with?
correct. Yeah.
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 Okay. Right.
So you would trade against one of our other customers.
Okay.
You
So
wouldn't actually
therefore,
know who the other
go on.
customer is,
Yeah.
but you will be up against the other customer.
So obviously, then the deeper the market, the more effective it becomes. So
Absolutely, yeah. So I guess for a lot of new exchanges, creating the liquidity is an issue. So
yeah.
it's I guess when you choose an exchange, that there's a lot of things you should look at. I guess one is how long has the exchange been around? What's the reputation of the exchange? Are they doing the right things? Are they being regulated? And also, what's the liquidity like on their order books? Because there are a lot of kind of illiquid, I guess, coins and also very illiquid exchanges out there. And you may find that, if you want to do a larger order, you won't get the price that you're looking for. So to that end, we've also launched an OTC desk about 18 months ago, and I think we're now Australia's largest OTC desk. So, if any one of our customers wants to make a purchase, which is maybe too large for the order book, so just say someone wants to buy $1 million worth of Bitcoin in one go, they can just ring up our OTC desk, and we can make sure that we can execute that trade at a very optimal price.
Okay. And do you make money basically on a spread, or how do you actually make money?
Yeah, so we charge a very small commission on every trade. So it starts at 0.5% and it drops down to 0.05%, depending on how much you trade.
Okay. So that's a volume base, right? So
it's a volume based commission.
Yeah. Okay. And so obviously it's in your interest to have more customers and more trades, because then you make more money.
Absolutely, yes.
Yeah.
And it's also great for our customers to be trading on a more liquid exchange, right? So
Sure.
kind of everybody wins.
Right. So one of the key questions I wanted to explore with you was the concept of online versus offline storage, because that seems to be quite a critical issue for people to understand, right?
Yeah.
So basically, as I understand it, online storage is, where it's basically there all the time, but it's in the network and therefore is at risk. The offline storage is perhaps more secure, even if it's slightly less accessible. Is that a fair way to think about it?
That's actually a really good summary of it. Yeah. So, what we do, and I guess what most other exchanges will do as well. So we have a combination of a hot wallet, where it's just basically like a transactional wallet, which has a small percentage of all the assets that we hold. And that's connected to the internet. And basically it allows people to deposit, withdraw pretty much in real time. But then most of our assets are held offline in a cold wallet. And basically the cold wallet is a wallet that's never been connected to the internet. It's held in a very secure way. So we use these underground vaults where there's a guy with a gun to basically make sure no one can access that wallet. I've never seen him use the gun, but I assume it's a real gun. And there's a lot of things in place to basically make sure that wallet remains very, very secure. There are things in place like no single employee of Independent Reserve is able to add another employee there as well. It's not just held in the vault, it's also encrypted. So we really go to great lengths to make sure that that's held in a very, very, I guess, in a way that is very difficult to access. Like it's even difficult for us to access it. And as a result of all this, we're actually able to get an insurance policy on the assets that are held in that wallet. So.
Right. And just to be clear, the whole point about the cryptocurrency is, there is no certificate, there's no other mechanism. It's all about the digital encryption that actually is locked into that particular set of transactions. So if that were to go awry, then the whole thing fails.
It's a bearer instrument, which basically means that whoever controls what's known as the private key to unlock that wallet has access to those assets. So we go to very large length to make sure that that private key is held in a very secure way, of course.
Right. Yes, and I remember that there's been a very recent incident in another exchange somewhere else around the world where one of the founders died and the keys went with him.
Yeah, so that's obviously a real risk. So we basically make sure that we, have the internal, operations in place to make sure that doesn't happen. So there are multiple people that have access to this wallet. There's a process in place. If the whole independent reserve building were to be hit by an asteroid, there is still a way to recover those funds. So we've put a lot of thought into this.
Very interesting. Now, let me just come back to the whole pricing question, because, you can stand back and look at a Bitcoin and say, well, I'm using US measures here, but, a couple of years ago, we were up at 13, that came right back down. It's went up to 10. It's now down at 7. So very volatile. Yeah. And of course, there's nothing underpinning the value other than the transactions going on at any one time, right?
Look, I guess I would argue that there is something underpinning the value, but we can get to that point.
Yeah, no, well, okay. Well, no, please do, because one of the interesting discussion points, and there are a few people on the DFA channel who have cryptocurrencies and are very bullish about them. And I sort of come back to, but, it's not gold backed, it's not asset backed. So it's about trust, and it's about the technology, and it's about the transactions. So what else is underpinning it?
Well, I suppose the utility provided by cryptocurrencies isn't able to be replicated in any other means. I mean, it's a payments rail that's not controlled by any single entity. It's not controlled by a government. You can literally send cryptocurrency from one person to any other person in the world instantly and pretty much for free, irrespective of how much you would like to send. So I guess that's not something that's ever really been around. And I suppose the other thing that people really like about cryptocurrency is that the supply is limited, and the supply is controlled by an algorithm that is very transparent, and you know exactly at any point in time in the future how many coins will exist. And I guess that's similar to a precious metal. You kind of can say there's a limited amount of gold in the earth, and the scarcity is kind of built in that way. But this is really modeled on that concept, and it's what's attracted, I guess, a lot of people to cryptocurrencies, because they see it as it's inflation. They see it as a hedge against monetary policy that maybe is a little bit too loose, which has kind of happened in the past. So I wouldn't say that there's nothing underpinning it. I think the utility that it provides is what gives its value.
Right. So I get this. I get the utility and the fact that it's not controlled by any central system. It's completely devolved. And I also get the fact that the number of coins are restricted. Although, of course, we do have division sometimes, and all of those things that correct different instances of currencies and cryptos, which of course creates a little bit of confusion in some people's minds. But no, it's very interesting, because I think there's a valid debate about to how speculatively is it vis-a-vis standard fiat currency versus gold. And different people have different opinions actually on that very point.
Yeah, sure. And look, it's a different thing to different people. So one person may use it as an asset class, something they use to diversify their investments. Another person may use it as a hedge against inflation because they live in, a country where inflation is rampant. Another person may use it as a means of, trying to transact with another person because they live in a country where, say, the banking system isn't very good. So I guess, we take banking for granted in Australia. The banking system in Australia is very, very good. It's probably one of the best in the world. But, more than half the world right now is unbanked. So they have no way to participate in the world economy. at the moment, but cryptocurrencies are very inclusive in the way that, anyone with a wallet can suddenly join the world economy. And no, it's a very inclusive technology, and that's never really existed before in the past.
It's certainly without borders, isn't it? Although it's worth saying, I guess, that the regulatory environment appears, to me at least, to be getting a bit tighter now. The verification and ID processes in Australia that are now required are much tighter than they were, aren't they?
Yeah, they were. I mean, so our view has always been that regulation is very important in this industry, and especially for the on ramps and the off ramps. So, being an exchange, we quite actively lobbied regulators to introduce regulation into the industry. So, when we first began back in 2014, we actually approached ASIC to get an AFSL. Um, at the time, cryptocurrency was still very new, and ASIC didn't really know what it was. Uh, but we were issued a relief letter that basically said that Bitcoin is not running a Bitcoin exchange does not require an AFSL, and that's still ASIC's view at the moment. Then through an industry group called ADCA, the Australian Digital Commerce Association, of which I was on the board, we spent a lot of time with Austrac. So we actually spent about 2 years going to Austrac, educating Austrac about cryptocurrencies, educating Austrac about what a Bitcoin exchange is, which part of this ecosystem can be regulated, and which parts we believe that really need regulation, and which parts would be a little bit harder to regulate. And back in April last year, so about 18 months ago, Austrac brought cryptocurrency exchanges under the and now this requires everyone running a cryptocurrency exchange in Australia to identify all the customers, track transactions, raise anything that they think is a little bit untoward with Austrac. So we have to report to Austrac. And this is great because it really brings the industry up a notch. And, I guess in the journey of taking cryptocurrency to the mainstream, this was a very important step.
Indeed. And I guess the other issue is that people still have a tax obligation for any profits they make, just like any other form of creating profit, right?
Yeah. So
with regard to ATO, yeah.
I'm not a tax advisor, so whatever I say next is not tax advice.
Sure.
Is that a good disclaimer?
No worries.
But yes, ATO taxes cryptocurrency trading usually as basically is if you were to trade equities, for example. So there's a capital gains tax event usually, unless you use cryptocurrency for personal use. And this is the thing that you would need to consult your accountant on exactly what personal use entails.
Yeah, so the point there is it's not a way of getting around tax. It still has to be accounted for in tax terms so far as individual income might be concerned.
Yeah, so a lot has been, I guess, written about cryptocurrencies being used for money laundering or trying to evade tax, but it's actually a very poor tool to do that because I guess the thing that underpins most cryptocurrencies is the blockchain, which is this distributed ledger that stores literally every transaction that's ever occurred. So cryptocurrencies are actually very easy to audit. And auditors, once they kind of get their heads around it, they go, wow, this is actually pretty good. Like we can track everything. And the regulators in Australia, they're quite well aware of things that they can track. So I wouldn't recommend trying to use cryptocurrencies as a way of doing anything that you shouldn't be doing.
Now, you might be aware of the current discussion around the cash ban, right? And one of the interesting things there is at the moment, they're basically saying, well, crypto is not a big enough pool of transactions to worry about. But actually, if later it became more mainstream and became a larger factor in the economy, then potentially we'd be looking to restrict transactions without reporting.
Yeah, it was a little bit disappointing to see that the definition of cash included cryptocurrencies in that bill. We actually talked to Treasury about this. I was in a meeting with them a while back. We submitted a response to this as well to Treasury. But as you said, there is an explanatory note attached to the bill that says that cryptocurrency will currently not be looked at, but it's disappointing that it was included in the definition of cash. Like we made it very clear that our point of view is that it's very different to cash because cash is so much more anonymous and so much harder to trace, whereas cryptocurrency is very much the opposite. So we were quite disappointed by this.
Yeah.
I guess it's going through the parliament now. We'll have to wait and see what happens. It's out of our hands at this point.
Yeah, so it's in the regulation, so it means it could be changed later
Yeah,
if required, without coming back to Parliament, of course.
I know that.
But
Yeah,
yeah, we're pushing quite hard against the cash ban more generally because we think there are a whole bunch of civil liberties issues that
I completely agree with you. But
are being derailed potentially. And I guess the other interesting question is Mark Carney, the Bank of England's recent foray
yeah,
at Jackson Hole, when he basically said he thinks that the next iteration of a currency after the reserve status of the US dollar could be a crypto, but probably a centralized asset backed like Libra or something rather than just a pure cryptocurrency. Were you surprised by his comments on that?
no, not really. I guess the US dollar is kind of beginning to outlive its usefulness as the world reserve currency. I guess you can only do so many quantitative easings before your counterparties lose a bit of trust.
Yep.
It doesn't really surprise me. And digital currencies and cryptocurrencies are kind of the hot topic at the moment. But it's important to remember that having a digital currency that's controlled by governments is very different to a Bitcoin-like cryptocurrency that's actually not controlled by any entity. It's actually not that different to having just a currency like the euro, for example. It's just something that governments agree to keep at a certain, like, to basically work to but it's very different to a decentralized cryptocurrency that's got no one really behind it. That's very difficult for a government or any other entity to control in any way. So, whilst maybe the technology will bring some efficiency gains, which is probably why they want to do it, it shouldn't be confused with a decentralized cryptocurrency.
Yeah, well, I think there's going to be quite a push for a central bank digital currency in a whole bunch of different environments, I suspect. So I think that'll be interesting, but it's going to play out not over months. It's going to be years, I think, judging by the
Oh, absolutely.
the latest read. Now, just then coming back to the headline, I was reading your website before we connected, and one of the things that your marketers came up with was that Bitcoin is the new property market. So let's explore that a bit. What was in the mind there when that headline was actually cooked up?
Oh, well, no, it's actually an interesting thing because I guess a lot of people like property because of the scarcity, right? So people like to buy land, buy houses because there's a limited amount of land in Australia, and there's a limited amount of land that looks at the harbour or is near a beach. So people see it as a safe investment because basically the scarcity is built into the investment. So people can't just produce more land, right? So this is, I guess, why people like to buy property. And investing in Bitcoin is actually very, very similar because that there will never be more than 21 million Bitcoin in existence. Right now, there are about 18 million Bitcoin out there. So the longer we go, the less new Bitcoin will be produced until we hit the asymptote in 2140, I believe it is, where just no more new Bitcoin will be produced. So as long as you believe in the utility of it, which is, I guess, the same as believing in the utility of land, as in people need somewhere to live, that's the utility that houses bring. If you believe that people will need to transact with each other in a way that doesn't involve a government, then I suppose it's a very similar investment, and the mental leap from property to Bitcoin isn't such a great leap.
Yeah, it is interesting. It's an interesting perspective, and it's I guess the other way to think about it, and I had a bit of a wicked thought there, right? Because I've been arguing that there's a highly speculative component to property prices in Australia at the moment, right? And so there's a degree of speculation there. There's a degree of speculation in the gold markets because of the way they're connected to the futures markets. And actually, therefore, there are similar speculative elements in every asset class.
Absolutely.
So
People like to speculate.
Yeah, exactly right. And that's just sort of goes with the territory. So, yeah, interesting. And the other thing that I noticed was you'd done a survey quite recently. And yeah, so one of the interesting things in your survey was that there's around the same proportion of Australians, 17%, who hold crypto as do hold investment properties. Now, I found that really interesting.
Yeah, that's right. Yeah. So I suppose the percentage of people that own crypto will continue to grow as cryptocurrency matures and becomes more acceptable and easier to access. And I guess the number of people owning an investment property will stay pretty much what it is now. Yeah, so it'll be interesting to see, because we aim to do this survey once a year, so it'll be interesting to see how this I guess, moves over the years.
Yeah, and but one of the most striking things was a difference in terms of the age group, right? So, what I think you found was that the majority of Australians with crypto is below 44, right?
Yeah.
Whereas in fact, there's a much larger proportion of older households who actually hold investment property. So I think that's a really interesting generational shift.
Yeah, sure. I mean, cryptocurrency is a new technology, and I guess traditionally early adopters of technologies tend to be the younger people. So it's not really surprising. But I do think that that's starting to shift. So just to give you an example, for about 2 years, started onboarding SMSFs. So basically people that are managing their own retirement funds. And we've had, I think now we're up to about 8,000 SMSF accounts in Independent Reserve. So that tends to be an older demographic. It tends to be people in their 50s usually. So they're really kind of embracing this new asset class. So I guess a lot of people with money to invest are now looking for places where they can get returns. It's getting harder and harder to get a return from traditional assets. Interest rates are very low, and in some parts of the world they're becoming negative. So you can't just keep your money in cash. So trying to diversify into new asset classes is kind of what people with SMSFs seem to be into.
Yeah,
Um,
interesting. And one of the things that, again, in the survey was that 73% have Bitcoin, right?
yeah,
Around a quarter have Ripple,
yeah,
and some of the other ones, or a combination thereof. And the other thing, I'll put this up on the screen, but there's quite an interesting breakdown by the amount that people are spending a month, because some people are spending a very small amount, but there are others spending quite a lot more on a relatively regular basis on crypto. So it's like it's an investment strategy rather than just a one-off speculation.
yeah. So I guess cryptocurrency, it's got the reputation and the tradition of being highly volatile, right? So it goes up, it goes down. So what a lot of people recommend is a strategy where you just invest over time. So we recently launched a product called Auto Trader, and this allows you to basically buy an amount on a schedule. So you can say, okay, I want to buy some Bitcoin once a week. I want to buy $100 of Bitcoin once a week, and it'll just automatically get the Bitcoin for you once a week at the price that is the active price at the time. So this basically kind of isolates you a little bit from the movements kind of in the price, because it's very hard to predict what the price will be next week or next month. It's still quite volatile.
Yeah, and I noticed that again, your statement in this survey was that in 5 years' time, the majority of Gen Zs and millennials will own crypto. So, pretty bullish.
Yeah, we're very, very bullish. So we've been in this for a long time now, and we're in this for the long run, and we're still very bullish. So the industry's never been as strong as it is now.
And why do you think that is? What's changed?
I suppose just time. So the longer you give people to build the infrastructure, and a lot of it is infrastructure being built, the better the ecosystem becomes. And also, kind of older, more institutional kind of areas of the economy become more used to it, and they begin to realize this thing's not going away. And then you start seeing services like insurance, and you start seeing consulting companies come on board. Yes, so we did a partnership where our customers can get a KPMG tax analysis report. So this is basically an example of a large, very established firm putting their name to a product associated with this industry, which is not something that would have happened a few years ago. So as more time goes on, the more accepted this becomes.
And we're seeing more investment banks, particularly in the US, getting closer and closer to being involved directly or indirectly. And some of them are even talking about running desks and things on crypto. So, you sort of feel that there's a bit of an inflection point in terms of its penetration. I guess it'll be an interesting journey and to see what happens to the price, because, as you say, there's a limited supply of coins, there's more interest, more activity. So, there's one argument to say could definitely go into much higher, and I see a lot of people writing that who are in the field, as it were. Difficult, of course, is to know over what time and how volatile it'll be, and what else might happen in the interim. So, but then, as we said, it's a speculative, activity, as is holding property, as is holding gold or silver, or frankly, even holding money in the bank these days.
Yeah, absolutely. I mean, it's just another asset class, right? So it's just another place to invest. I would never recommend anyone putting all their money into crypto.
Yeah.
But if you have some money to invest, I think this should be part of the equation.
Well, Adrian, I really appreciate your time today. That's been a really interesting, fascinating conversation. And it's really helped, I think, to build out some of the knowledge around crypto. I look forward to tracking this over the next little while, and maybe we'll catch up down the track and see how things are going, because crypto is not going away.
It is not. It's been good. I really appreciate your time, Martin. Thanks.
Good to talk to you. Thanks very much.
Cheers. Likewise.
Bye.